Let's try it again. Is that better? George, thumbs up? Excellent. Good evening. Ahla sahla, welcome. Welcome members and guests to the Australian Harrow Business Council's third dinner for the year. My name is Janan Issa from Sabio Financial Solutions. I've been a member for 8 years. It's been a little while since I've been up on stage, but I'm a little bit rusty, so please bear with me. I'm filling in for Reem Burrows, our regular host. Unfortunately, Reem lost her father last week. She's in Melbourne with the family at the moment. We've sent our love and condolences to her and her family on everyone's behalf. But with a bit of luck, she'll be back up here in June. But I'm going to do my very best to be as close, or to get to as close as Reem as possible. Hey? I would like to acknowledge that this event is being held on the traditional lands of Darug people of the Eora Nation. I pay my respects to elders past, present and emerging. The Australian Arab Business Council is a vibrant organisation that conducts monthly networking dinners to share ideas and engage with industry thought leaders. We are one of the largest monthly business gatherings in Sydney, and I'm very happy and proud to share we are celebrating 20 years this year. Yes, definitely a woohoo. On the 11th of December, we'll be having our gala dinner here. So please keep an eye out for all of our announcements as they start coming through for our gala event. The AABC works closely with governments and businesses to build local and international trade relations. Within Australia, the AABC has established a strong working relationship and networking between various members. Next, I would like to take a moment to acknowledge all of our sponsors. I'm going to start with our Platinum member, who are Sam the Paving Man, with Mr. Sam and Mrs. Annette Ha from Sam the Paving Man. Our foundation partner, Able Bank, Mr. Joe Risk. Gold members, Tempe Tyres, headed by Mr. Sam Talib. Now, our silver members are Hamden and Associates, Naturally Timber, All Star Solutions, TechRam, Sabio Financial Solutions, Credible Accountants, RM Gregory Promo Print, and Civic Lawyers. I would also like to acknowledge Member of Parliament Lebanon, our guest, Mr. Ihab Matar, visiting Australia at the moment. Now, before I have the absolute honour and pleasure of introducing the one and only President, can I just take a moment to remind everyone that the bathrooms are at the door, towards the end, back there, if anyone hasn't figured it out yet. And please, I hope you enjoy the meza ahead of the dinner. Now, without further ado, I would like to introduce the one and only Mr. George Busamra from SynCorp for a word of welcome to everyone.
Excellent. So thank you very much for everyone joining us this evening. And once again, I'd like to acknowledge Ihab Matar, just entered the room from Lebanon, Member of Parliament over in Tripoli. Ahla wa sahla. Hope you enjoy your stay with us today. Excellent. So great news with the Australian Arab Business Council. We're definitely on track with our mission for this year and how we're progressing with developments online and, of course, as we meet every month. So if you haven't had the chance to as yet, please visit the website aabc.org.au. Please, I'm sure most of you have subscribed to our newsletter, so that way you can be kept in the loop with what's happening with our events and, of course, different operations within the community. And as we lead up to December, when we celebrate our 200th dinner, our 20-year anniversary then. So this month, I think it's important because, the budget month has always been a good note for our community, and particularly with the number of the changes that are being proposed at the moment, it's always great to kind of deconstruct and actually have a fellow peer explain what these changes mean. So really excited about that. Also great news with this month, we actually do have a few Lucky Door prizes that are quite exceptional. I think we're up to 4. One of which is from our friend Sam McCool, the comedian, who's doing his 50th birthday / comedy session at the end of May. So if you haven't been able to find that one yet, please do look it up and support Sam as much as he has supported us. So please do that. And of course this year there'll be plenty of opportunities to grow your brand, not only with us but also with different activities within the community as well. So please do reach out to us if you want to participate. And from our general membership, there are board positions coming up within the Parramatta and Canterbury Bankstown local area. So if anyone would like to be part of a board, not our board, we're okay, but if you'd like to be part of another board, please do reach out to me, because there are plenty of opportunities from organisations out there that are looking for people like you. So if you'd like to take up the challenge, please do let me know. Happy to point you in the right direction. Okay, now without further ado, we did promise you an EGM, Extraordinary General Meeting, because we do have to reflect upon our Constitution and make an update. So I'd like to introduce one of our board members, Sam Darwish, to the stage. Please give him a big round of applause, he does deserve it. And you'll give us an update. I don't want to persuade you on how to vote, but I'm sure Sam will be unbiased in his tenure. Thank you.
Good evening, ladies and gentlemen. Before we get onto the riveting topic of the federal budget, as George introduced, we have to do an EGM, which is to vote on some changes to our constitution. So notice has been given, 21 days notice has been given because we require a special resolution to change our constitution. I'll quickly give you a high-level rundown of what some of the key changes are. A lot of these are kind of procedural and to update it because there's been legislative changes. And there's been a change to the associations and corporation regulation. So one of the key changes is we're going to be introducing a new tier of membership called affiliate membership. Affiliate membership is a non-voting class of membership, but the objective is to try to encourage other businesses and community organisations and smaller individuals to join. And the purpose is just to kind of expand the scope of who can be a member in this organisation. Other changes include the ability for the board to create subcategories of members. So, for example, we currently have several categories of membership under our constitution. The board will, by ordinary resolution, be able to appoint subcategories, which will reflect on the rights and privileges associated with it. And the reason for that is that we don't have to do a special resolution every time we change the rights and obligations of members. Now, the quorum of members present and entitled to vote for a special resolution to be passed is 10 members. Could you please raise your hand if you're a member? Yep, looks like we've got plenty of members. So I declare that there is a quorum for this special resolution at this general meeting. Now, the resolution to be passed is that the schedule of amendments advertised, and which I have a copy of here, and which has been attached to the notice of special resolution, is to be passed. And we're going to be having a vote by show of hands. So what I'll do is I'll call for any members who wish to vote in support of the resolution to raise their hands, and then anybody who wishes to vote against the resolution to raise their hands. We have to have at least 75% of the votes in support of the resolution for it to pass. So now I'll call on anybody who wants to support the resolution to be passed to raise your hands. So I've counted 15, 16, 17 votes. Now anybody who does not want the special resolution to pass, please raise your hands. Okay, so it looks like 0 votes against. On that basis, the special resolution has passed and the constitutional amendments will take effect. Congratulations. Thank you, everyone.
That was exciting. Haven't had one of those in a while. Special resolutions. Hey? Excellent. That's all we want, Mr. President, a smiling face. Okay, now, without further ado, forgive me, Mr. Zaki. Our wonderful guest speaker is Mr. Farid Zaki. I joined 8 years ago and he was definitely here 8 years ago. How long have you been a member? 17 years. You're well ahead of me. And very appropriate surname. Okay, so tonight's topic is more than just a networking event. It's a chance to learn about how the federal budget, which was handed down yesterday, affects us, small business, medium business, the economy, the families, etc. And this is actually a fantastic opportunity for us to ask questions of Farid. Yep. Ask questions of Farid. Just to let you all know up front, it's going to be 5 questions at the end, and then after dinner you can stalk Farid and the other accountants in the room for more questions, because this one can go for hours and hours. And please, questions only. Not looking at anyone in particular, questions only. So without further ado, it's my absolute pleasure to introduce the one and only Mr. Farid Zaki.
All right, so are we all ready for an exciting presentation? Okay, now I need you to all stand up for 1 second. Pick somebody in your table, hopefully somebody you don't know. If you are next to your husband or your wife, please find a different person, because what we are about to do is very important. So can we all stand up and look at someone? All right, look at someone, don't look at me, and just repeat. Pick someone that you like. And just trust me, no talking, trust me, just repeat what I tell you to repeat, okay? Look at someone, don't look at me, and repeat exactly what I'm about to tell you. Are we ready? Yeah. All right. Roses are red. Violets are blue. What Australia needs to get out of this deficit is awesome business leaders like me and you. I think I just summarized the budget for you and I told you Australia needs you. Did you get the message? I think the treasurer would have done so much better if he did that yesterday, right? All right, so I'll try to make it fun and engaging as much as possible, but please feel free to ask any questions. This caricature was shared by Sydney Morning Herald, and it talks about how Chalmers bursts the boomers bubble. Let's see if that's true. Okay, so we're going to talk about a few measures very quickly. There's a lot of details, there's more information to come. Of course, it needs to receive royal assent, and the law needs to pass, and the explanatory memorandum will pass once that is being passed by government, but we will quickly run through things. I realize there will be a lot of questions and happy to take them. We'll start by, firstly, the capital gains regime and how it was affected. So effectively, from 1st of July 2027, the 50% capital gains will be scraped and replaced by what used to be called the cost-based indexation. And it's basically for assets that are held over 12 months. So as it stands, you buy a property, you hold it for 12 months. After the 12 months you sell it, you get 50% exemption. After the 1st of July, this is going to be replaced by indexation. For existing properties, if you already have investment properties, assets, any assets, if you already have it, the rules will be grandfathered, which means that up to the 30th of June, you will be allowed to use the 50%. From the 1st of July, valuation need to happen, and any increase happening from 1st of July onwards will has to be worked on cost-based indexation. There is a minimum tax placed at 30% of the net capital gain. Effectively, at the moment, if you are at the highest tax bracket and you're paying 47% out of a 50% after the 50% discount, the effective tax rate is 23.5%. So effectively, as you can see, now the minimum is 30%. So it's a bit of an increase, but it's not such a big drama. This is applicable to individuals, trusts, and partnerships. But the big thing that it pulls any assets prior to 1985. 1985, that's when capital gains was introduced. Any properties that are prior to 1985 will be pulled into this. There is, as we discussed, transitional arrangement, and for those period, anybody that has held assets, they will still continue to use whatever methods that they had, but from the 1st of July, it's going to be changing to indexation. Now, if you buy a brand new residential property after budget night, you will have the ability, after the 1st of July, you will have the ability to continue to choose when you sell it, whether you want to use the 50% or the indexation. So clearly the government wants to encourage new building, which is a great initiative because it affects a lot of people in the building industry. Now, the minimum tax of 30% is excluded by people who are age pension recipients and government recipients. So that's one of the major changes. The second major change, and this is going to have the much bigger effect in my opinion, it's the scraping of the negative gearing. Remember, this is only for residential property. Okay, so if you have a factory or if you have an office or you have any commercial property, these rules about scraping the capital gains tax is not applicable to you. This is only applicable to residential property. And the thinking about it is the government wants to allow people to enter into the market, and that's why they have these rules. So again, from the 1st of July, any losses that you incur between the difference between the rent and the expenses, any losses that you incur after the 1st of July will not be deductible against other sources of income. You will be allowed to roll it over from 1 year to the next, and use it in future gains from the rental of the property. If you come to sell the property and you still have losses that you haven't used up, you can offset it. So in a way, it becomes like a capital in nature rather than it's deductible. And this initiative starts at 7:30 last night, 12th of May. Any properties acquired before that date will still continue to be able to use negative gearing and be claimable up to the time that it is actually disposed of. Again, there is an exemption for new building. Again, the government is telling us that they want people to buy new residential. If you buy new residential, you will continue to be able to claim negative gearing. Now, in my simple mind, I think they're going to make it very difficult if they want to encourage people to buy properties. All of a sudden, most investors will be pushing towards buying new residential so that they can claim that. But again, that's their thinking. Now, properties in superannuation funds luckily has been excluded, and that's good. So capital gains inside superannuation has not changed. It still remains that if you are in accumulation phase, so below pension age, you get 10% tax. After pension age, it's 0 tax. Now, we're going to talk about another initiative which is going to affect anybody that has family trusts or what we sometimes call discretionary trust. What's the type of discretionary trust? The family trust is where you can change beneficiaries. There are fixed trusts, similar to companies, where you have 50% one person, 40% the other, 10% the other. That's a fixed trust. But if you can change who receives distribution, we call that discretionary trust, and it's usually referred to in a family circumstances as family. Now, this initiative takes place from 1st of July 2028, so it's applicable for the 2029 year, and trusts will be required to pay 30% tax. Obviously, between that date, and where we are now, there is going to be elections. So I'm not sure if there is change of government, whether they will pull that or not, but that is not something that we need to worry about because we have more than 12 months to worry about it. The tricky part is the beneficiaries. So non-corporate beneficiaries will be able to receive the credit, non-refundable credit, and offset it against any other tax liability that they have. Corporate beneficiaries, or what we refer to as bucket companies, will actually not be able to receive the credit. So I think, in a way, the government is basically wanting to scrape trusts, and it definitely wants to scrape bucket companies. So as we said, excluded from this is the fixed trust, testamentary trusts, trusts that are in relation to a disability. So if somebody is disabled and we hold a trust in their name, that's excluded from that. Now the government has allowed that from the 1st of July 2027, people to roll over their entities if they want to avoid this tax coming through. And I think that's a great initiative because that's an opportunity where we can do restructuring legally without any income tax. Now, I need to stress to you to please check your personal circumstances, because if your trusts are in New South Wales and in New South Wales and Victoria, you will have no stamp duty implications. But if your trust is anywhere else in any of the other states, there will be stamp duty. So there will be no income tax implications, but there could be potentially stamp duty in the state that you have registered your trust. Now we'll go through very quickly with the individuals and the benefits that they have in this trust. So this is an initiative that was announced before, but it will start to take effect from 1st of July 2026. So in the next financial year, people will be able to claim up to $1,000 against their job without having to substantiate it with receipts. In previous time, that was $300. Now it's been increased to $1,000. Now, it's important to say that the $1,000, if you are to claim up to $1,000, you don't need to have receipts. But if you are claiming $1,001, you need to have receipts for the $1,001. So it's not like 1,000 no receipts and then you have receipts for another 2,000 and claim 3,000. No. If you hit the 1,000, that's fine. Anything above that, you have to have receipts for the whole lot. Excluded from that, so this is basically only work-related expenses. So excluded from that 1,000 is charities, donations, payment to union as charitable organization. Now also from the 2028, so this is not this year coming up, the year after, the government was so happy to announce that they're going to give everybody $250 to buy extra cup of coffee, I think. Where basically it's going to be called what we call Working Australian Tax Offset. And this is going to be a permanent annual tax offset. But again, it starts from 1st of July 2027. So it's applicable for the 2028. So you will not see effect of it for the next 12 months. Just quickly, other initiatives to do with individuals. The bottom tax bracket after the tax-free threshold, which is the 18,000 to 45, is going to drop from 16% to 15% from 1st of July 26, and it's going to drop a further to 14% from 1st of July 2027 for low-income earners. There is a bit of changes in Medicare levy as well, where the thresholds for singles, families, and pensioners have actually increased as well, so you don't get caught out. And also there is a bit of a change in reference to private health insurance. Now, I won't go into a lot of details so I don't waste time. I'm going to focus on the things that could be applicable to a lot of more people. Also, there is a ban on foreign purchases of established dwellings. The government put that ban. So this ban has actually been extended now up to the 30th of June 2029. Now, I want to talk about effects for businesses, because most people here might be in that arena. A good change is they now have the instant asset write-off, which is made out of $20,000, is going to be added permanently. So if you have a business and you buy an item for $20,000 or less, you don't need to depreciate it anymore. We can claim it outright as long as your turnover is less than $10 million. This is in existence, by the way. You can use that for the 2026 year. So if you want to buy any assets before 30th of June, less than 20,000, and you can write them off, you can do that. Now remember, the 20,000 need to be the total cost. It cannot be the loan cost, because I have this question all the time where people say, I'm going to buy a $50,000 car, I'm going to take a loan for $20,000 and pay $30,000, or the other way around, pay $20,000 cash and borrow $30,000. Will that? No. The total asset has to be less than $20,000. Again, with cars where people are doing a trade in, for example, so they're buying a $50,000 car and they're trading in a $30,000 car, for example, that doesn't make the car claimable, even though you're only paying $20,000 for it, because the total cost is more than $20,000. Now, two initiatives are really good about the loss carryback for companies. So it's in a situation where a company has less than $1 billion in turnover and they have losses over the previous 2 years. They are able to carry, and you have a payable in 1 year, they will be able to offset that. Now, I don't want to bore you with the details. If anybody is in that scenario, we're happy to talk about it. But the carryback is limited to the franking account credit. So if the company has paid tax and then it made losses, it's allowed to use those losses even if the losses were previous. Now we know, of course, that the government has stepped in since the 1st of April and reduced the fuel excise. Unfortunately, that's not going to be moved beyond the 30th of June that they initially have done. The next one is about startup companies. So companies who have been in business for less than 2 years. If they have losses in those 2 years and they have paid any fringe benefit tax or any PAYG, they are able to have that PAYG and FBT reduced and offset from their losses. This is a great initiative for startups. The questions about how we actually do it and when do you do the tax return, how do you offset the PAYG, it's still coming in the memorandum. But if you are a small startup, less than 2 years and less than 10 million, and you have any losses starting from 1st of July 28, please look at that, and we're happy to talk about that. Also, from 1st of July 2027, people are able to pay their PAYG installment, which is basically if they have a company, they're paying company tax. If they are a sole trader, they're paying tax on their own. They are allowed to do that on monthly basis. In previous periods, that was done on quarterly basis for cash flow. There is some initiatives in reference to R&D incentives. I'm happy to share this information, but not a lot of people will be in the R&D tax claims, so I will skip that, but happy to talk to anybody about it and share it. Electric cars, from the 1st of April, from now to the 1st of April, there are certain rules where if the car is less than 75,000, the fringe benefit discount is up to 100%. This is going to be changed from the 1st of April to 2029, where the discount is going to be 25%. Now, based on the information we have, if you do decide to buy an electric vehicle from now to that date, you will still be able to claim the 100% according to the information that the Treasury has passed. There is a little bit of too much details about a lot of things which I'm not going to run into it because we're running out of time. But one of the big changes that could be affecting a lot of people is the NDIS scheme. The government will be cutting, unfortunately, $36.2 billion over the next 4 years and removing up to 300,000 from the scheme. So the question is, are they actually taking, the government seems to think that they are taking bad weed out of the grass, but we hope that that's the case and they're actually not affecting people that are in real need. There's figures for housing, health, and all of that, but I won't bore you with the details. But just quickly, since we are coming up to the end of financial year, that's what will feel like, that the taxman will empty your pockets. So I'm going to run quickly about a couple of issues that is really important. As we are getting close to the end of the financial year, please make sure you do some tax planning prior to the end of 30th of June. We start with structuring. Structuring is going to become a quite important issue. Restructuring, looking at your current structures, negative gearing, capital gains tax, how you're holding property, how you're holding business. You need to look at structuring. It's very important. Plan your income and plan your expenses. Now, if you are planning your income, you need to think, do I need to accelerate my income? So if this year my income is less than next year, maybe you should give 5% discount to all your customers and say, pay me early before 30th of June. Or the other way around, if you're going to be earning more this year than next year, then defer that income. So say to people, you know what, I love you, you don't need to pay me till the 1st of July. I think they're going to send you a gift. Or think about splitting, as long as you are not under PSI, personal services income. So if you have an ability to split, then that will be good. Again, plan your expenses. It's very important. Again, we talk about accelerate, defer, or split. So with your expenses, can you pay your expenses before 30th of June? If you need them this year, more than next year, pay them this year and claim them outright. If you are making less money this year, you don't need the expenses, can you defer it after 1st of July? Again, think about splitting. So if you have two partners, one earning more money than the other, then say you want to pay donations, for example. So maybe pay donations to the partner that's making more money and give them more expenses to claim. I'm reminding you that as of the 1st of July, we have payday super commencing. It's really important if you have a business and you have employees and you're paying them salary, you now need to pay their super at the same rate that you pay their salaries. So if you're paying their salaries on a weekly basis, the superannuation is going to be payable on a weekly basis. You've got to have the systems, the procedures, and very importantly, you've got to have the cash flow. We think that this is going to affect businesses big time because the first quarter, not only do you need to worry about April, May, and June if you want to pay before the due date in July, but you need to come up with the money for the period from July onwards. Remember, if you haven't paid up your super up to date, pay your super up to date individually and claim deductions on it. If you can buy assets 20,000 or less before 30th of June, as long as your turnover is less than 10 million, buy them. If you need to pay insurance, donations, deductions, if you are got already an investment property, you can claim negative gearing. If you are buying any more properties, please, before you buy your property, please speak to your accountant and make sure that what you are doing, so whether you are putting it in the right structure, whether you're going to be claiming negative gearing or not, whether how the capital gains is going to be worked, it's going to be imperative that you put it in the right structure. It's too late once you put it in the contract, so don't go exchange contracts, then tell the accountant. Please speak to the accountant early, because it could mean the difference between you being able to claim negative gearing or not. And like I said to you, in my opinion, I think the availability from now onwards to not claim negative gearing for existing property is going to be a big thing. And it's going to affect, in my opinion, availability of properties for rent. And it's probably going to increase the rental, because as a landlord, if the landlord was getting a tax relief before, now they don't have that tax relief, so their actual cost is going to increase. Well, guess what? If they need to keep the property, they need to pass that cost on to someone. And unfortunately, that's going to be the tenants. So that's my take on the budget. Happy to answer questions till we run out of time. So please don't shy away. Happy to answer any question. Thank you. I tried to make it as less boring as possible.
Thank you so much, Fareed. Personally, I'm very depressed, but before I talk about how I feel, Does anyone have any questions?
Can I actually answer that? Please don't. Can I answer that? Please don't be depressed, because there is always ways around doing things, but you've got to have the right advice. Okay, don't be depressed. There's always a solution for everything.
Okay.
But you've got to have advice, and now it's more important than ever to get advice. Okay.
You're number 5. There's 5 questions. No, you're number 5. You're number 5. We saved the best for last. We saved the best for last. Wallah. Yeah. No. Wait. One last over here. Someone had their hand up.
How you doing, mate? First time caller. Long time listener, first time caller. My question is, if I have my residential property now,
Yes.
and it's purchased, say, last year, and I go find another house and I make this property my residential, my investment, would that still be classified as pre this law, or is it going to be no capital gains tax on that?
Good question. I'm not sure. We haven't seen that in the explanatory memorandum. But in my opinion, because that property that you're talking about, you were living in it first, and you're living in it at the moment. So as a budget night, that's not an investment property. But good question. Happy to look at that for you. Haven't seen it in the explanatory memorandum. That's a good question.
Go, Michael. Very good question. Over here. Number 2.
Hello, Farid. Thank you for that. My question is, I saw the exclusion was a fixed trust.
That's right.
So is it hard to move from a family to a fixed trust?
It's not, and that's why they have the rollover relief. So the difference between a family or a discretionary trust and a fixed trust is the beneficiaries are not, that could be changed. So me and you could be in business. We are not family, so we could have a discretionary trust, and we can distribute the profit at the discretion of the trustee. That's what we call a discretionary trust. A fixed trust is where me and you are in the same trust. You own 60, I own 40. That doesn't change. So it's similar to a company with shares. A fixed trust has to have a percentage in ownerships, and that's why they are allowing the ability to be able to. Sorry, I lost the slide. You are able to change over. That's why they are allowing people to change over if they need to. So the answer is yes, you can move the trust. If it is in New South Wales and Melbourne, you don't have stamp duty issues. So if the trust that you're moving across has any assets, you don't have stamp duty issues. But if the trust is any other state, you need to take advice to work out if there is stamp duty applicable. But there is no income tax applicable.
Hello, Farid. Excellent presentation.
Thank you.
So they're scrapping the 50% CGT break and replacing it with indexation. But what happens if the cost base is $0? Like, for example, startups or other things. Does that just mean that they get zero exemption?
Unfortunately. So the way indexation works is you go back to find out, obviously, if it is starting with a zero cost, then you have nothing to build on. If you have $1, the dollar changes in CPI every year. But if the cost price is zero, and this is actually one of the points that is being raised with Treasury at the moment, because a lot of the small business exemptions haven't been affected by these rules, but a lot of them are going to be where they are selling their shares or something like that, and their cost base is zero, then they're going to get stuck, because realistically, even if you uplift zero, it's going to be zero. So
will that not discourage entrepreneurialism in Australia?
Look, a lot of the mechanisms that they have done, it does look like they don't want investors. They don't want people to invest. They don't want people to be on business. It's really strange, but unfortunately, that's what it spells.
Thank you.
Thank you, Sam. Second last, Vas.
Thank you for the presentation. My question is where does the costs and interest that you're paying on a property, where can you offset that? Is it offset when you sell it, or are you just never offset it.
So if you have a so we're talking residential.
A residential. So
Yeah.
you
So
do
if you
some
have
fixing a tap or a small renovation,
So
and
when-
the interest.
Yeah. So basically, what happens is in a normal scenario, you have rent coming in as income in a residential property, and then you have all the ongoing expenses: council rate, water rate, depreciation, interest, so on and so forth, excluding capital costs. So if you put a bathroom, we have to depreciate it. You can't claim the whole bathroom together. So once you do all of these expenses, if there is a difference between the expenses and the rent, that's create a rental loss. So if this property was purchased prior, you will be able to offset that loss against your other income. If it is bought from budget night onwards, that loss will be rolled over from 1 year to the next until it meets a profit in the future. If it doesn't meet profit and then you sell the property, then that loss will be part of the capital cost. So it will be rolled over basically from 1 year to the next till it meets gain, rental, profit. Because usually what happens when you buy a property at the beginning and it has a huge loan, the interest usually offsets all the income. That's why you have a loss. But as the loan goes down and all the expenses, including depreciation, go down, then you have positive income. We will then be able to claim those losses. But if it happens that you sell the property before you claim all of those losses, then those losses left over will be used as a capital deduction against your capital. So you will not be able to claim back, and that's what I'm trying. So you can claim it only against the rent of that property, but if you have two properties, you can't claim one loss in one property against the other. Every property is going to be on its own schedule, and we will have to offset it. So you will never be able to claim it after budget night if you buy a property. It will come out in the future. Unless it's brand new, yes. Thank you, Jeanette. Yeah, so remember, brand new have exclusions. If you buy brand new for capital gains tax, you will have an option to claim the 50% or indexation. If you buy brand new, you will be able to claim negative gearing. So in all aspects, brand new is applicable. And in reference to negative gearing, it's only applicable for residential properties. For capital gains, it's all assets. But for residential negative gearing is only residential property.
And lucky last.
Number one.
For the best.
Of course, always.
Anyway, I've been here 55 years this year. There's not much difference between Liberal and Labour. In the end of it, the government, they are the winner. And we are, the working class people, the loser. Thank you.
Does anyone else have any questions? I think we have a little bit more time, just in case there's one more. If not, oh, yep, here we go. Michael?
Thank you. So just a question around what constitutes a new property. So is it any new properties created from today? So for example, you build a new house. If you rent it out while you try to sell it, is that no longer a new property or is it still a new property?
So we haven't seen all the details, but I would assume a new property will be if you construct a new property that will be deemed to be a new property. But to be honest, all these fine details come in the explanatory memorandum. But to answer your question, if you rent it and it's a new property, then obviously as long as the date is budget night or 1st of July, depending on which measure you're asking about. So for capital gains tax, we're looking at the 1st of July. For negative gearing, we're looking at budget night. So we're looking at two different dates.
So but for purposes of negative gearing, say the building's finished tomorrow, you rent it out for a day and then you sell it. Is it still a new property?
So if it finishes tomorrow,
Yes. So
and it's brand new,
it's brand new, but you rented it out for a day, then you sold it. Is it still a new property?
I guess it's still a new property as of after budget night.
Okay.
And then you want to claim the negative gearing.
Correct.
So I would assume.
Can the new buyer essentially claim the negative
No,
gearing?
buyer is different. You as a seller and the buyer, they're different conversation. The fact that it's new to the... So if a developer is selling a property and the buyer is getting it from the developer,
Yes.
we are looking at the buyer situation. We're not looking at the seller
So
situation.
essentially what I'm trying to understand is if it's a going concern that is created after the new budget, but it's sold as a going concern, is that considered a second-hand property or a new property for the purposes of the budget for negative gearing?
Good question. So I would think because you rented it first, then it falls under negative gearing rules. So once you sell it, it's not going to be brand new, technically.
Okay.
But then again, whether the 1 day constitutes that or not, I don't know. But I guess when they do the explanatory memorandum, they will do all of that. But the question is what happened first? In your scenario, the rental happened first. So I would think that when you come to the selling,
Yeah.
that will not be brand new in the order that you've listed it. So,
Understood. Okay, thank you.
You're welcome.
Thanks.
Again, guys, this is still brand new. Like this has literally happened last night, 7:30. So there's a lot of unknown information. Of course, it needs to go and receive royal assent in the parliament. But then when that happens, we then get explanatory memorandum that talks about a lot of the simple questions and practical ways of doing things. So I guess it's really important, if you are to learn anything from this, is to seek advice before you do anything. Seek advice in reference to structuring. I think structuring is going to be something that will be quite important. What is it that you need the property to do? Are you going to live in the property? Are you going to rent it? Is it positively geared? Is it negatively geared? Based on all of this, you can then make an informed decision. Which structure do I use? Do I want to claim negative gearing? How do we work that out? So, yeah.
Thank you so much, Fareed.
Thank
Big
you.
round of applause, please. Crazy amount of effort went into preparing this. I think, 24 hours of work, Fareed?
That's it.
Okay, so if anyone does think of any further questions for Fareed, we'll give him 15 minutes to have a bite to eat and a drink before we come and start overwhelming you. But that was great. Thank you so much. I'd just like to take a moment right now to ask our wonderful board members to please stand up. For any members or guests that may have a question or a query or something they'd like to raise with us, please come visit your local friendly AABC board member with those beautiful smiling faces. Thank you, guys. Big round of applause for our very hard-working board. Now, as we wait for dinner, I thought I'd take a moment and let you all know that we have four lucky door prizes. I don't know if anyone's noticed this over here. ATP, i.e. Fareed Zaki and co have very kindly offered this wonderful door prize, lucky door prize. There's a portable speaker, some wonderful pens, a money clip, a water bottle. I'm very keen, Fareed. I'm actually going to put a business card in that one. There's also a couple more. I think George mentioned it earlier. There's 2 tickets to Sam McCool's 50th birthday comedy gig at the Comedy Club at Fox Studios or the Entertainment Quarter, depending on how old you are, on the 29th of May. And we also have 2 separate dinners at the Crown Cuisine in North Strathfield. I think the Gibrans have opened a new restaurant that they would like us to visit. So please make sure, if you haven't already, put your business card into the bucket. And if you don't have a business card, we have a wonderful little assistant that can create one for you. We have the wonderful Mr. Aguero over here. He'll be coming around to everyone after dinner and during dinner before the door prize. So with that, please, sahten ohana, enjoy your dinner.